Hello friends, welcome to today's video. Today we will analyze the company Desktop Metal, ticker symbol TRNE, and discuss if this stock is a good one to buy now or not. Before we get into details, please note that Desktop Metal is currently a private company and plans to go public by merging with another company called TRNE Acquisition. So if you want to buy the stock now, you would have to buy TRNE Acquisition and will eventually end up owning Desktop Metal if and when the merger is completed later this year. To give you a bit more context, TRNE Acquisition is a special purpose acquisition company, in short a SPAC, which was created solely for the purpose of buying out a private company and bringing it to the public markets. This is no different than other popular SPAC-sponsored companies like Helion, Nikola Motors, Workhorse, and Virgin Galactic. Now let's discuss more about Desktop Metal's business model. As you can see in this vision statement from their website, Desktop Metal is engaged in the 3D printing industry, specializing in manufacturing the machinery and consumables required for the companies to run their factories and operations. If you are loosely familiar with the 3D printing trend, you may remember that there was a lot of hype in 2013-2014 when the word first became popular, and the stock price of many of the potential companies shot up significantly before crashing all the way down as nothing much happened in terms of real business value. Now this trend is trying to gain traction again, and hopefully this time around it is not just hype. The technical possibilities are certainly immense, so the industry at large does anticipate that 3D printing will disrupt the existing manufacturing landscape in a big and positive way. The key difference between Desktop Metal and some of the other companies in the space is that they already have customers and sales and are priming to take things to the next level and transform the industry from a prototyping phase to mass production. They are hoping to become the first $10 billion Additive 2.0 company. Additive 2.0 is just another name for the new wave of industrial revolution, of which 3D printing is one of the key ingredients. Now let's look at some of the important slides from the investor presentation that Desktop Metal released after the merger with TRNE was announced. As you can see on the slide, the additive manufacturing industry is expected to grow 11-fold in the next decade, from the current $12 billion to $146 billion in 2030. Desktop Metal believes this rapid growth will be propelled by the shift from prototyping to mass production of end-user parts, and this is also the reason why they believe their company is ready to reap the benefits of this trend. I personally feel that this industry is certainly ready for massive growth, but it needs to be seen if Desktop Metal will be one of the bigger beneficiaries out there in the long run. And in terms of the potential customer base for Desktop Metal, as you can see here, there is again multiple industries that could benefit from the 3D printing revolution. In particular, this is expected to be a massive transformation to the manufacturing industry, both in terms of design and supply chain reengineering. And here we can see the company's products. Their studio system, that is mainly suitable for production of prototypes, has already been in the market since 2018, and their shop and fiber systems are scheduled to start shipping in Q4 this year. These models certainly look very innovative and are suitable for mid-volume production rather than just prototyping, which is already a very promising sign for the company's revenue prospects. And then there is the production system expected to ship in the second half of next year, which would be a game changer for the manufacturing industry, as it is designed for the factory floor to mass produce metal parts at high speeds. It is also notable that the company has over 120 patents issued or pending. Moving on, this chart shows the potential cost effectiveness of the Desktop Metal system compared to traditional manufacturing technologies. For example, say when casting using traditional technologies, it would take 100,000 units to have the same cost effectiveness of using the Desktop Metal system. The cost savings are even more amplified when projected 10 years out, as it's estimated to take 1 million units to have the same cost effectiveness. Now let's briefly look at their current customer base. Specifically in the auto industry, you can see that they are already working with the key manufacturers, and if you notice closely, both Ford and BMW are even investors in Desktop Metal, which is a very promising sign. And as you can see here, they also already have several other blue chip customers from a variety of industries. It is again very promising to know that they already have business relationships with the likes of Google, Lockheed Martin, and even the US Navy. And in terms of distribution potential, as you can see here, Desktop Metal already looks set to scale with coverage in over 60 countries worldwide. Now let's discuss the thing I found most exciting in their business plan. As you can see in this chart, where they illustrate the estimated revenue from the sale of one shop system, it is very interesting to note that their revenue doesn't stop with the sale of the machine itself. Due to the nature of their proprietary technology, they will continue to earn revenues from the sale of parts and consumables for at least a 10-year period. As you can see, the estimated 10-year revenue is over $1 million, which is amazing for the company given that the initial sale of the machine only generates less than $300,000. For context, this can be compared to how we use inkjet printers at our homes, where the printer itself is very cheap, but the ink is very expensive, and we end up paying much more in the long run. It is also noteworthy that the gross profit expected is $600,000 over the 10-year span. It would be extremely positive for the stock price if the company can meet these margins while also hitting their sales targets. The potential numbers on the production system, which is the one large manufacturers will be using, looks even more lucrative at $6.5 million in revenue and $3.8 million in gross profits over a 10-year span for each machine sold. Now let's look at the valuation of the company as estimated when the merger deal with TRNE acquisition was announced a few weeks back. As you can see here, the deal values Desktop Metal at around $2.5 billion at a price of $10 per share. Out of this, around $526 million is expected to be available as cash for the company once the merger deal is completed. So now that we have looked at the valuation assigned to Desktop Metal, let's see if this presents us with a buying opportunity now. To assess this, let's look at their revenue and earning estimates for the next few years. As noted earlier, the company already has some revenues currently, which is a great sign, and as you can see in this chart, the revenue is expected to rapidly increase in the next 4 to 5 years on the assumption that the company is able to bring the products to market on schedule and capture the desired market share. And as with any new company that is hoping to grow its market share rapidly, the first few years don't hold any promises for bottom line earnings, but starting in 2023, the company expects to start growing their earnings rapidly. If all this goes as per plan, Desktop Metal targets a revenue of $942 million in 2025 and an adjusted EBITDA of $268 million. Just looking at these numbers as is may seem out of reach for the company, but when seen in context with the addressable market estimated for 3D printing, the 2025 revenue is just 2% of the addressable market, which is absolutely achievable if the company executes their product launches on time and don't face any operational hiccups along the way. Now that we have seen the company's product pipeline and the estimated revenues and earnings potential, let's discuss if it is a good time to buy the stock now before the merger deal is completed. As with any company that doesn't have steady current revenues and earnings, let alone one aspiring to disrupt an entire industry, it is very difficult to place a reasonable valuation on the company today. How big this industry and company will grow in the future is for time to tell, but if we are reasonably optimistic that Desktop Metal will achieve their 2025 revenue and earnings targets, the current stock price of $12.40 is a bargain. The reason for this is that even with a modest 20 price earnings ratio in 2025, the stock price would be around $22, which would give us a great return on investment. And obviously, if you estimate the stock price at a 30 or 40 multiple instead of 20, the potential gains can be much more larger. So having discussed all this, a couple of things that is clear to me is that the industry prospects are great and the company's estimations of owning a pie in this exciting space is also quite reasonable. But obviously, since these are just estimates, there are unknown risks like potential competition, delays in product launches, operational mismanagement, slower industry adoption, etc. that we need to consider before deciding to buy the stock now. Personally, I like the risk reward for this company, so I have already purchased a few shares around $11.50 and will continue buying in the range of $11 to $13 in the upcoming weeks and months. Another way to invest in the company is to buy the $11.50 warrants that expire in March 2024. This currently trades for around $3.70 and might be a better option if you want to limit your risk to the price you pay for this warrant and at the same time have a reasonable expectation of the company meeting their business goals into 2023 and 2024. If they can achieve this, then the price of the warrant can be expected to go over $10, which would give us a 3 to 4x return on investment. Personally, I will split up my investment between the common stock and the warrants to optimize the risk and reward potential. Another thing that gives me reasonable confidence in the stock is the experienced management team and the backing of Chamath Palihapitiya, a very prominent venture capitalist who is an investor in the company and is well known to make highly knowledgeable bets on next generation growth companies. I hope this video has managed to spark your interest in the stock, and I would love to hear your thoughts, so please share your comments and questions below. And as a friendly disclaimer, please note that I am not a licensed investment advisor, and my videos are only meant to document my views on various investment related topics that I am interested in. So please consult with your own investment advisor before making any investment decisions. And if you enjoyed this video and found the information useful, I would really appreciate if you can please leave a like below and subscribe to my channel. Have a great day, and I will see you in the next video.